Hello, beautiful people, and welcome to another brand new edition of the ITU Forex class. In this week's episode, we're actually going to be talking about how much capital you really need to be able to trade the Forex markets. Okay, so the reason why I thought about using this, discussing about this topic in this week's episode is because this is a question that a lot of traders, especially inexperienced traders or traders who are just new to Forex trading, struggle with. Okay, and there are lots of people out there who claim to teach you how to trade like professional traders who actually shy away from telling you the truth or the reality of Forex trading. Okay, and seeing as though last week we talked about how to create a trading plan, okay, because this is one of the things that professional traders do, which struggling traders do not do, then this is just the logical next step for you to actually progress with as you plan your year, as you plan a year that is hopefully going to be a profitable trading year for you as you embark on your journey towards becoming a consistently profitable trader. Okay, so first things first, how much capital do you really need to trade? I'll keep it simple with the answer to this question, very simple for you. Okay, in trading, in Forex trading, okay, the amount of capital you're going to need to trade will depend on what your goal is. Again, I repeat this. The amount of capital you're going to need to trade is going to be directly related to the goal that you have. Remember, last week I told you that having a monetary goal, or for example, saying something like, I want to make a lot of money through trading, or whatever that kind of goal might be, is not a good goal to set. But rather, what you're expected to do is to, first of all, find a trading strategy that works. What is a trading strategy? A trading strategy is just, or a trading system is basically a methodology which is going to tell you when to buy and when to sell, what currency to buy, what currency to sell, when to take a loss and when to take profits. All of these things, okay, is what your trading system is going to tell you to do. And then once you find the trading system, you don't just blindly trust it. You take it to the markets. Before you take it to the markets, you actually take it to the markets in a simulated trading environment where you're going to be trading with that particular system on historical data where real money is not going to be involved. So in that type of situation, what you're basically going to be doing is you're going to be trading with that particular trading strategy, but on a historical price chart where you are going to see what that system would have done if you used it to trade in the past. Why is this important? This is important because this will give you a realistic expectation of what that system looks like. So for example, if you've defined the rules of your trading strategy or your trading system, it tells you when to buy, when to sell, when to take, where to place your stop loss, where to place your take profits, how much to risk per trade, which currency pair to trade, all of these things. You've already mapped them out. And then you took that particular system to the historical price charts and you traded with it. You took like something like 100 or 200 trades with it, and you found out that the system is actually profitable. Now you have something. Now you have an edge. But then, just because the system is profitable in the past does not mean it's going to be profitable in the future. So ideally, what you would want to do is you want to take that step that testing phase that you did, which is backtesting, you want to take it a step further. And that is, the next step is what we call forward testing. So if, for example, the trading strategy or the trading system that you've decided to use, you've mapped out and you've tested and it's profitable, but the time period that you tested was, let's say, from 2015 to 2018 or 2020, for example, 5-year period, okay? And you found out that the trading system was profitable. That's your back test. Now, you could decide to forward test that trading strategy on the same historical data. What this simply means is that if your back test was done with the aim of proving that trading strategy is actually profitable, that it's going to give you an edge over the markets, then your forward test is meant to double check or confirm that particular trading strategy was not confitted. It wasn't something that you just used in the time period where the market was favoring that trading, that particular strategy. Okay, you used it in a time that, okay, let's say the market was good, but then when you for test it on a completely different time period, it still delivered the same results. This would mean that it wasn't confitted, or it wasn't just, specifically designed to perform well on that particular period. And that's why you're for testing, to confirm that yes, this particular strategy or this particular system truly does give you an edge over the markets. Okay, now once you've done this, the idea is you've backtested, it was profitable. You for tested on a period that is completely different to the period that you backtested in the past. So if you backtested, let's say 2015 to 2020, ideally you'd want to do a forward test like 2020 to 2023, for example. Okay, and then once you've done that forward test, you're going to now move on to the third phase of the process, which is live testing. The idea behind live testing is now that you've proven that the trading strategy is profitable in the past, you now want to use it to trade in the live markets to see how the live markets would react, or how the strategy would react to the live markets. So for example, if you traded on historical data, your entries and your exits will be perfect, near perfect. The reason is because since you're trading on historical data, that's not a live trading environment. On the contrary, when you're trading in a live trading environment, most times if there's news coming out and you are trying to get into the market with a trading position, you're not going to get in at that exact price that you want to get in at. Most times there's going to be slippage. Slippage, for those of you who don't know, is when you are trying to get in at a certain price, but then your order gets filled at a worse price than the price you wanted to get in at, because there was widening of spreads or whatever due to economic news releases or anything like that. Okay, and so the only way you're going to get the impact of those type of uncertainties in the market is when you trade with a trading system or a trading strategy in the live markets. And that's why the third phase of your testing process is to actually test that your trading system or your trading strategy in that live market environment. Now, when you do that, you are going to now see how that trading strategy would have performed. So if, for example, with your backtest for that 5-year period, you took something like 200 or 300 trades. And with your forward testing, you took something like 100 or 150 trades. And all through the while, your trading strategy proved to be profitable. Now, ideally, you want to take a lesser number of trades in the live markets to see if the impacts of commissions or widening spreads or volatility or all those things are going to cause your trading strategy to not be profitable, or it's going to still be profitable regardless of all of those conditions. And if that is solid, you also end up being profitable with your live testing, then you have something to work with. And that is the step of the process where you are now going to start talking about how much you would want to trade with. Why am I saying this? The reason is because most of the times, traders who are completely new to the market, they don't have a trading plan, they don't have a trading strategy. In fact, they don't even know how to define when to buy, when to sell, how much to risk, how much not to risk, when to take a loss, they don't know any of this. And then somebody just tells them that, okay, they should come and learn Forex, and he tells them that this is what a PIP is, this is what the trading platform is, and that's it. Go and fund your account and trade. And because these traders have absolutely no idea about trading, they will now go and deposit money in their trading accounts, money that they cannot afford to lose. And not only are they trading with money they can't afford to lose, the other thing is, because they don't even know, they've not even been told how to trade properly, they now have unrealistic expectations of how much they can make through trading. So for example, here's a good example. Okay, let's say somebody just learns about Forex trading from a seminar or from somebody, just, not the proper way to learn from professionals, for example. And then after the whole thing is done, maybe because that guy who taught them has an affiliation with a broker or something like that, that person now tells them that, okay, just open an account with this broker using my, referral link. And then once you open the account, just deposit anything. And the person will be like, okay, how much do I need to deposit? Because I don't have much money. And the guy will be like, just deposit anything, even if it's $100. Because most of the times these things happen, okay? And this could be somebody who is introducing you to a broker that he knows that even though $100 is in the world of Forex trading is almost nothing. But he knows that since he's going to be making commissions from your trades or whatever the case might be, he just wants you to deposit that money to trade. Okay? And so you deposit that money, and because the money is just, in the grand scheme of things, it's almost nothing. And maybe because you've been led to believe that, Forex trading is where the money is and all of that, you now have that notion that you're going to deposit this $100 and, within a week or a couple of weeks, you're going to turn that $100 into $10,000, for example. Okay, this is something that happens quite a lot in the trading industry. And this couldn't be far from the truth. To be honest with you, okay, these steps that I told you, before even coming to the stage where you're talking about how much you need to trade with, these are the prerequisites that you need to do. And one of the reasons why this is important is because when you take the time to backtest a trading strategy, to see its drawdown, its win rates, its average wins, its average loss, all of those things, its average monthly returns and all of that, this would give you an idea about the performance of that trading strategy. So for example, here's the results from one of my trading strategies, okay? I've talked about this trading strategy in previous lessons. It's the trend trading strategy that I've talked about a lot of times, okay? It's a simple trend trading strategy that uses 3 time frames: the daily, the 4-hour, and the 1-hour chart. The daily tells you the direction of the trend, and then you confirm that direction of the trend with the 4-hour chart and look for trades in the direction of that trend using the 1-hour chart. It's really that simple. You can find the videos on the channel, okay? Now, after I've backtested this trading strategy for a number of years, you can see that I did this backtest from way back in August 2018 down to October of 2021. And you can see that these trading strategies, my particular trading strategy that I'm using as an example here, even though it made me money, the money wasn't consistent. Here's what I want you to really take home, okay? Most people, especially traders who are just getting involved with Forex they're just getting started. Most of the times, because they come from a corporate world where they usually earn money on a salary basis. So for example, if their contract says that, they work for that particular institute they're working for, or the organization or anything, and they're going to get paid a certain amount of money per month consistently. So if it's 500,000 naira, it's going to be 500,000 naira every month. Okay, assuming it's not a commission contract or marketing or anything like that. Okay, it's a regular job. Okay, now most people would come to Forex trading thinking that trading is the same thing. Meaning, what I mean is, they think that the money that they're going to be making from trading is almost the same as a salary job, where they're going to get a certain amount of money each and every month. And that couldn't be further from the truth. You can see that this particular trading strategy that I traded with, even though at the end of the period of this testing, it was $100,000 account that we used for this example, for this testing. But at the end of that period, it made $41,000 in profits. But even though it made this money, there were months where not only did I not make money, but I lost money. So, for example, in the month that I started this backtest, August of 2018, I actually made a profit of 1.54% of the account's balance, okay, starting balance. And then the month after that, I lost 0.09%. The month after that, I lost 0.35%. And the month after that, I lost 1.67%. You can see it from the histograms. So there are months where I would make money, and there are months where I would lose money. Then there are months that I'll make a little bit of money, or I'll be almost at break even. And there are months where I'll make a lot of money. Okay? Now, the thing is, this is how income from trading works. It's not as if you have $100,000, for example, you are expecting to be making $10,000 per month every single month of the year, period. You're never going to lose. That's not how trading works. And that's why at the end of all of this, you can see what I did here. I made an average for the returns, the average monthly returns that this trading strategy had. So what's the average monthly return figure? You can see that even though there are months where I made 1% and there are months where I lost 1% of the account starting balance, there are also months where I made 3%. There are months where I made 5%. Okay? But then at the end of the day, I took an average of all of these months, and then the figure I ended up with was an average monthly return of 1.06%. So what does this figure mean? This figure simply means that this particular trading strategy, again, I must make the disclaimer here that past performance doesn't guarantee future results, okay? But this is the next best thing we have, okay? Because you can't just take a trading strategy that you've not tried and seen that it's done good in the past and just apply it to the live markets, because you don't know how it performed in the past. So obviously you don't know if it's going to perform good or not in the future. So this is the next best thing we have. That's why we are testing these strategies to see if it even had a good performance in the past. And then we are hoping that it will replicate something like that in the future. Okay, that's what we are doing here. So assuming that this particular trading strategy, okay, that gave us these results, when we take it to trade in the live markets, on average, even though we understand now that trading is not going to give you a fixed income each and every month, assuming that we understand that there are months where we are going to lose money and there are months where we are going to make money, even though we are doing everything right, proper risk management, following all of the rules of the strategy, not skipping trades, not giving into emotions or revenge trading or doing any of those bad behaviors. We are doing what we are supposed to do. Okay? Assuming we are doing this, we are hoping that we are going to get an average monthly return after a series of months of 1%. Now, this is where you're going to get the answer to the question where this video is titled about. Okay? So, if, for example, your goal is to be able to make $10,000 on average from trading, again, look at this chart. When I say $10,000 on average through trading, that does not mean that you're going to be making $10,000 each and every month through trading like you get paid from a salary job. There are months where you're going to likely get more than that $10,000. And depending on your account size, obviously, okay? I'm getting to that. And there are months where you're going to make much less than that, okay? And there are months where you're even going to lose a little bit of money. But on average, after a couple of months, maybe 24 or whatever months, your average is going to be $10,000. Then if that's what you want to make, you need to come back to your average monthly return of your trading strategy when you backtested it to see what that figure is. So in this case, the figure is 1%. So for you to be able to make 1%, and for that number to translate into $10,000 per month on average, then you actually need to trade with an account where that $10,000 that you need to make is going to be the 1% of that account. And in this case, what's that number going to be? In this case, the answer to that question would be $1 million. So for you to be able to make $10,000 per month on average, if that is your monthly figure, okay, then you need to be trading with an account size which is $1 million. Now, $1 million is a lot of money, okay? Especially if wherever you are, it doesn't even matter whether you're in the third world or the first world or anywhere. $1 million is a lot of money. But in this day and age, it's actually a blessing in disguise that we have opportunities to trade with prop firms, for example. So you could choose one of two routes. If you're one of those people who is born with a silver spoon and $1 million, you could get access to a $1 million capital and it's not going to be a problem for you, then that's fine and dandy. Open your account with a Forex broker of your choice, deposit that money and trade with the strategy that you've backtested and forward-tested and proven that it actually has an edge over the markets. And then at the end of the day, hopefully if what happened in the past is likely to replicate itself and you trade the way you are supposed to trade, like a professional trader with good risk management, following the rules, not giving into emotions or any of that, then hopefully you're going to, make a profit on that particular account, which is in line with your goal of how much you want to make. But if you don't have that money and all you have is maybe a couple of, thousands of dollars or a couple of hundreds, then in this case, you can work your way up to that. What do I mean by work your way up to that? Well, you've backtested and forward-tested and live-tested your trading strategy and you've proven to yourself that it actually works. Your only problem now that is preventing you from hitting your monthly profit per month figure average, okay, is the lack of capital. In this case, then you can work your way up by starting with looking for capital through prop firms, and then what I mean by work your way up is you're going to start trading with smaller accounts. So for example, you could start with something like, a $10,000 account or a $20,000 prop firm account, and then you pass the evaluation, pass phase 1, pass phase 2, and then when you're able to get funded and make profits from that funded account, instead of withdrawing that money and just buying the next cool thing that you want with that money, you're going to reinvest that money to get bigger prop firm accounts. And when you keep doing this, hopefully your strategy still keeps performing the way you expect it to, then you're going to keep getting profits. Although some months you might make profits, some months you might lose money, but if you're trading like a professional that you're supposed to do, then overall, after a long period of time, after taking a couple of trades, you're going to end up being net positive, okay? And so you're going to withdraw those profits that you made from your funded account and then buy bigger accounts. So if you started with like $10,000 prop firm accounts or $20,000 accounts, when you make something like 5% or 10% on that account, on your funded account as profits, and the prop firm takes its cut and you're left with your own cut, instead of just spending that money mindlessly, you're now going to take that money, reinvest it, and get bigger accounts. Okay? Something like, let's say, a $50,000 account or a $100,000 account. And before you know it, you keep doing this, and before you know it, you'd have $1 million or way more than that in prop firm allocation. And when you do have that with reputable prop firms, not the fly-by-night ones that are out there to rip you out of your earned money, or your hard-earned money, then making this 1% or $10,000 profit per month figure on average is going to be a reality by then, because you now have access to the capital. You just need to continue doing what you're doing. So this is if your goal was to make $10,000 per month. But now, here's what a lot of traders don't tell you, a lot of mentors, okay? Especially the unethical ones, what they don't tell you. Let's assume you just got involved in trading, and let's say you don't have any much money to trade with. Your life savings is even just $1,000. And obviously, I would never, ever, ever advise any trader to trade with his life savings. Money you cannot afford to lose. Trading is meant to be done with capital that even if you were to lose it, it's not going to change your lifestyle drastically. It's not as if you traded with that money, you're going to be under the bridge, in the next day or whatever, because that was your rent money or that was your child's school fees or something like that. Trading is meant to be done with risk capital that even if you lost it, it wouldn't change your lifestyle all that much. Okay? So assuming all you had was like $1,000, and what you can actually lose without breaking the sweat is like $100, for example. Most of those unethical traders will tell you that you should dump that $100 in the Forex trading account, and then they're going to tell you all sweet things like, they can give you signals to help you flip the account. You can do this, you can do that. And before you know it, you deposit the money, you trade with risk management that is not proper because you're trying to make, maybe $10,000 or whatever the crazy amount is from $100, okay? You're just trying to flip that account. And whenever you try to do, that's not sustainable. You will not hear Warren Buffett telling you that he funded an account with $100 and trying to make millions off of that. That is not what the professional traders do. The professional traders have access to huge capital. Do you think they don't know what they're doing by getting all of those capital? And on average, what they make in a year is not even in the double figures in profits. Okay, on average, it's if they make 5 or 6% in a year, they are extremely excited. Okay, and you just need to trade like the professionals. As long as you say that what you're going to do is what you keep seeing people doing online on Instagram or YouTube or any of those places, they fund an account with $10 or $100 and triple it or double it or quadruple it or whatever, you're going to be trading with the kind of mindset that people who get stuck are trading with. Because you could make that, you could fund your account with $100 and then you try to flip it, and then maybe you even do the impossible. You make that, you turn that $100 into something like $5,000, for example. But because it's not sustainable, and you've been led to believe that, doing this is easy, Instead of you withdrawing that money and using, investing it wisely, like trading with platforms or whatever the case might be, where your risk is going to be limited, you would be trying to double that since you've done $100 to $5,000. Obviously, you're going to be thinking you can do $5,000 to $1,000,000, for example, and that's not sustainable. You need to, before you can answer this question, how much capital do you need to trade with? You need to first find a trading strategy that fits your personality, something that you're comfortable with, and then backtest it using a backtesting software like Software FX, for example. There are lots of them out there. FX Replay, Forex Tester. There are lots of them out there. Find the one that works for you. Backtest the trading strategy. Forward test it on historical data, then test it live. After you've proven that the trading strategy actually does give you an edge over the market, then you'd find the number. What number am I referring to? It's average monthly returns. So there are months where the strategy will make a lot of profits. There are months where it almost break even, not make enough money, or you're just at 0%, you didn't even make anything. And there are months where you're going to lose money with that trading strategy. But find the average figure that it returns on a monthly basis. And then if you get that number, then you're going to say, okay, since this is the average number that it returns per month, my goal is to be able to make X $1,000 per month, for example. And if that's what you want to do, then you're going to now use that number, backtrack it so that you know how much capital do you need to trade with in order to be able to hit your monthly profit goal with that average monthly return that the strategy gives you. And then you try to raise that capital. If it's going to be through the private investors route, good. If you have the capital lying around, you just fund an account and trade with it. And if you don't, you could use prop firms, online prop firms, and then trade with them. If you don't have money to get $1 million in funding in a couple of weeks or whatever, work your way up. Start with smaller accounts. When you pass phase 1, pass phase 2, and get funded, and you make withdrawals from that funded account, then you reinvest to buy bigger accounts, and keep doing this until you hit your capital goal. And then you by then you're going to be able to hit the average monthly figure that you have as a goal. Okay? You just really, really need to stop falling for the, deceit and, scams that people give you online, telling you that you can start trading with just $100 and overnight, you're going to become a millionaire or whatever the case might be, because that is not the reality of trading. Trust me, if that was the reality of trading, then all of us would be millionaires overnight. So trade like a professional. Do what it takes. Backtest your trading strategy, your chosen trading strategy, test it live, and if you've seen that it's actually profitable. Again, I have to put this disclaimer out here that past performance doesn't guarantee future results, but this is the only thing we have. Because if you cannot, because we have no certainty that even though a trading strategy that performed in the past is not guaranteed to perform in the future, if you don't backtest it or anything like that, then you're just going to be trading blind. And maybe you might be trading with a strategy that didn't even work in the past, and because you have nothing to base your benchmark or your data on, you're going to trade it live, and it's not even a profitable strategy to begin with. But that's the next best thing that we have. Okay? So please do the due diligence. Backtest, forward test it live, and then come up with the numbers. What's the average monthly return? What's my goal? And then how much do I need to trade with? You backtrack. So again, because we've talked about a lot of things, and this might be a little bit confusing for you. Again, here's what I did. I tested my trading strategy. I'm just showing you the backtest results here. I'm not showing you the forward, because it's you get the idea. I don't need to show you the forward test and the live test. Okay, but when you backtest your trading strategy, you're going to get a figure. What's that figure? Each and every month, there's going to be numbers that this is how much a strategy made. This is how much it lost. Again, the reality of trading, I told you, is far different from that of a salary job. A salary job is where you're going to get a certain amount of money, each and every month. But with trading, that's not the reality. The reality is that there are months that you're going to make money, there are months that you're going to lose money, and there are months that you make a lot of money, and there are months that you're going to make, your loss is going to be a very big loss, okay? And this is even if you're doing everything right, meaning your risk is consistent, you're trading whenever you see a signal from a trading strategy, you're not skipping trade signals because the last couple of trades were losing trades, okay? And so you're fearful of taking a trade, you don't take a trade. Or you're not getting greedy because the last couple of trades were winning trades, and so now you're trying to double your account with one single trade. You're not doing any of that. You're doing what you're supposed to do, okay? Even if you're doing that, there are months where you'd lose money and there are months where you'd make money. Okay, so assuming you're doing this, you have the rock solid discipline and mindset and everything, and your strategy is profitable, then you're going to get these numbers. And so you're going to decide, okay, what's the average monthly return of this trading strategy? Even though there are months where it made 1.5%, there are months where it lost 1%, there are months where it made 3%, you get the average figure. And for my own particular strategy, the number is 1%. So assuming, and this is where I gave you the example of how we used to calculate how much you need to trade with. So assuming your goal, your monthly average profit goal, again, when I say monthly average profit goal, this does not mean that this is the number that you're going to make every month, because it's not salary. Trading is not a salary job. It's just on average after a lot of months. This number might be the average that you make. So if your average goal is to make $10,000, then for you to be able to make $10,000, trading with a trading strategy that returns an average monthly return of 1%, then, excuse me. So for you to be able to hit that number, you need to trade with a capital where 1% of that capital is $10,000. And when we did the numbers, you divide that 1% by 0.01. And so once you've done that, you now multiply that $10,000, which is your average monthly goal, by 0.01%, and that will give you the capital figure that you need, which in this case is $1 million. So what if your average monthly figure is only $1,000? In this case, you divide that 1% average monthly return of your trading strategy by 0.01. And then that $1,000 that is your average monthly profit goal that you are aiming for, you now divide it by 0.01, and then the capital that you would need to trade with in order to make 1%, which is going to be equivalent to $1,000 per month on average, okay, that's going to be $100,000. And so if you have $100,000 saved up, you can go and trade with it using that trading strategy, because you've already proven that it's profitable. But if you don't, then you might go and find private investors, show them the stats from your trading strategy, convince them to invest with you, and then you trade for them. Or the better way is to trade with online prop firms. Raise a little bit of money and buy prop firm challenges. You're going to lose some, obviously, and that's losing online prop firm challenges doesn't mean that you're a bad trader, because you could buy a prop firm challenge and be trading at a time when your trading strategy is experiencing a legitimate drawdown. There's nothing you can do at that moment, okay? So that's just a numbers game. Ideally, you want to trade with a prop firm account that you can lose 3 times in a row. So if your budget for trading with prop firms, for example, is $500, then instead of taking all that $500 and buying $100,000 prop firm account, it would be more advisable for you to buy like 4 or 5 $10,000 accounts, so that if you trade and if you're in a drawdown and you lost one account, that's not a problem. You just load the next account and keep trading until you are able to pass phase 1, phase 2, and make profits on the account. Then you're going to withdraw that profit and reinvest so that you can scale up your capital. That's just how it's done. Okay? Yes, it's not sexy, it's not enticing because it's a long and hard way, but again, there's a reason why people tell you when you try to get rich quick, most of the times you're not going to do that. Okay? Except if you're going to be using illegitimate means or whatever the case might be. So again, guys, this is a long class, and that's because the topic we talked about today is very important. Please do your due diligence. Before you come up with the number, which is going to tell you how much you need to trade with, you need to do this work. Prove to yourself that you actually have something that works before putting money behind it. If it does, even if it's a offline business, most of the times, you're not going to take all of your savings and dump it into that business. Most likely you'd start small, and when the business returns profits, you reinvest and you keep doing it. This is just how it's done. Okay, so please do that. Now, as is the norm with these classes, I would like to use this opportunity to invite you guys to test out our ITU Forex bots, which are designed to trade on your behalf and look for low risk, high probability trade setups for you. If you follow our risk recommendations, they're going to place those trades for you and hopefully get you earning while you're learning how to trade. So if you're interested in it, please drop a comment in the drop your questions or comments in the comment section, and then we'll be more than happy to assist you set everything up step by step, or reach out to us on our social handles, okay, across the social platforms. So once again, I really appreciate you taking time out of your busy schedules to come to these classes and try to learn to improve as a trader, okay? So the key takeaway from this class again is find a trading strategy that suits your personality and your lifestyle, test it and prove to yourself that it works, and then you can work the numbers and decide how much you're going to need to trade. I've just shown you the formula, okay? So once again, thank you, and I look forward to seeing you guys in next week's edition of the class. Have a wonderful rest of your day, and God bless you all. Cheers.